Hi, this is Kerry Artek with Wicked Stocks bringing you the daily Apple report for Monday, November 6, 2023. But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already. Subscribe to the Wicked Stocks YouTube channel. Share the content, if you would, with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever. I also want to mention that in the last couple of weeks, we've put out analysis on NetEase, Cisco, Alphabet, Renaissance. I go through the entire list. They're all relevant stock picks for you to see for free by taking advantage of that 5-day free trial. So let's check out the Apple charts. Big picture as usual. Work my way into the day itself. Just to reemphasize, the mid-160s long-term support, these channel tops that we settled above in May, set off a long-term buy signal that I think is still intact. In other words, I still am anticipating this 230.62 long-term channel top in the months ahead, this point next year or sooner. That sooner would come if we were to close above 186.66 at the end of any week. This 186.66, every time we test this channel structures in the mid-160s, I mentioned how 186.66 remains a 1 to 2 month target. We're probably going to see that area over the next 2 to 3 weeks. This following the settlement last week, Thursday, above this descending 1/3 speed line projected off that July all-time high, 174.34. Now, on Friday, we gapped back below the speed line, but we closed above it. My system, using daily charts, is settlement-based on a daily basis. And that is what most systems are, line study systems, moving averages, and so forth, settlement-based signals. So, in other words, we would have needed to close last Friday below 174.34, or that speed line, I should say, to reject the buy signal that was elicited the day before. That buy signal is still intact above 174.34. Still anticipating now 186.30 over the next 2 to 3 weeks, and that remains our 2 to 3 week objective. So, if you're a 2 to 3 week swing trader, you may have been there may have been a bit of a head fake on Friday morning. You may have bailed on a long position. That's understandable. That can happen. But in terms of a close by close, settlement by settlement basis, it is still all systems go to the upside as we move into later November, expecting this 186.30 channel top, 186.66 on the weekly chart as shown a moment ago. Now, working our way up from here, we have 178.11 that you can see here as our intraday resistance. Now, that's a level we came very close to testing on Thursday. Nothing more than a 3/8 upside Fibonacci from the July high against the more recent October low. We can hesitate here again on an intraday basis, and below 178.34 certainly allows 174.34 again intraday, where we can bottom out for the week, and as I say, above which 186.30 remains a 2 to 3 week target. So if you're given the opportunity to buy 174.34 today, it is still a valid bottom picking zone of support, above which day traders can anticipate 178.11, 3 to 5 day swing traders can anticipate 180.68, and 2 to 3 week swing traders can anticipate 186.30. Options traders, short-term options traders, if we're slipping into the 174 handle today, may reach for 180, 181 out of the money calls that don't expire for at least a week, or 185 out of the money calls that don't expire for at least a month. That's the way I would play the time horizons on those strike prices. 174.34, our base of near-term support. Pushing through 178.11 today does signal 180.68. This blue line channel top, able to contain daily buying pressures. We could fall off from here into later week. These channel structures have a way of behaving in said manner, and so not only daily containment, but possibly into later weeks. So once again, 3 to 5 day swing traders buying 174.34, selling 180.68, and selling 180.68 perhaps by going short back into the mid 170s again within several days, 3 to 5 days of testing 180.68. But bear in mind, a 2 to 3 week objective continues at 186.30 above 174.34. So don't fall in love with a short position at 180.68. In other words, you can play the short side at 180.68, but if we close above 180.68, no good reason to stay short Apple through the rest of the week. If we were to close today, and I don't see it, but if we did close today above 180.68, I think by Friday's close we actually reach this 186.30 channel top. And so that would be like a full week later. Instead of 2 to 3 weeks, we might see an acceleration. I see acceleration occurring with a settlement above 180.68. Until then, I think this is our trouble spot as we move into mid to later week. So keep that in mind. Closing above 180.68 has upward pivot point qualities in itself that should yield 186.30 within a matter of 3 to 5 days. 186.30 in combination, of course, with the same channel top on the weekly chart at 186.66 can contain buying through November. We can fall off from here again, back into the mid 160s perhaps, within a month or two of testing 186.66. But also keep in mind, if you put in the proper context, I do see a long-term bull market that it wants to play out above 166.82. With 186.66, nothing more than a mere hesitation point on the way up to 230.62. So, once again, closing above 186.66, while I don't see that happening this week, over the next few weeks, it very well may. And that would then suggest a more protracted, steady rally through the first quarter. This could be 3 to 5 months. This was a January low against a July high. So that was a solid 6-month move. If we close above 186.66, we've already completed about maybe 15-20% of it on the way up. So this could be a 3 to 5 month move if we close above 186.66 up to 230.62. And in fact, as we're looking at this chart, I'll make another point, and I don't see us retesting it this week. We have tested this mid 160s channel top 2 or 3 times now over the last month and a half. But if we were, I actually am forgetting now the point I was just about to make. Oh, yeah, I know. If you're given the opportunity to buy the mid 160s again, you may reach for 230, 240, 250 out of the money calls that don't expire for at least a year out. If you're an options trader and you like the long-term approach, or you just buy Apple, a buy and hold strategy. I'm talking to longer-term investors now. No good reason to be short Apple or to not be long Apple as we test the mid 160s. Now, if we were to close below 165.40 at the end of this week, by a full 1% margin, I have it noted here, 163.75, then yes, you can play the short side aggressively, anticipating the lower 130s within 3 to 5 months. But that's not what's in play right now. We are bullish this week above 174.34. Now, downside, do I show downside a little bit here? If we break if we break 174.34 today, 173.15 is in reach. That is just below Friday's low. That may be it for the day. But if we break 173.15, then yes, 171.37 in reach, and that is the high of the low. Solid support for the day, but once again, closing back below 174.34 does put the market back on its heels. No good reason to be long Apple as we move through the rest of the week and into next. If you're long Apple in anticipation as a 3 to 5 day swing trader of either A, 180.68, or B, a 2 to 3 week position trader up to 186.30, my suggestion is if we close below 174.30, you cover that long position and consider going short. Then anticipating 171.37 tomorrow, and over the next 3 to 5 days, yeah, it's quite possible that if we close today below 174.34, we could fall back by Friday's close into the mid 160s again, although that move could spill into next week depending on volatility. 165.57 this is not an updated level here. These horizontal numbers are from last week. It's really 165.40 to 166.82, able to contain selling once again, not only for the day, not only for the week, not only for the month, but through all of next year, perhaps. I also want to make one more point before I finish up here, and that is to say, if we were to close below 165.40, at the end of the week on Friday. It needs to be by a 1% margin, 163.75 or lower. And I will draw to your attention this meaningful rising two-thirds speed line that has trend-defining qualities in and of itself that is projected off the January low. It's at 163.02 on Monday, and it climbs into the 163.70s, I believe, by Friday. So it will correlate on Friday with that 1% margin anyway. So as we move into later week and certainly into next, this 163.02 rising speed line does correlate with, it will be part of a range of support that can absorb selling once again through the rest of the year, and above which, no good reason to be short Apple if your time horizon is anywhere from 2 to 3 months out to through all of next year. I think I've made that point. I'm going to leave you with this image here, the most appropriate for the day. I'm not going to say any more. I'm going to leave it at that for Monday's Apple. Please click like, share, subscribe, and check out wickedstocks.com. You have a great day.